Hi, today is Sunday the 18th, and as you can see, this is a very, very bullish market. Crazy bullish. I mentioned that last week. There's probably nothing changing the current momentum. The tone is bullish, and it will be this way until the Fed presses on the brakes or earnings disappoint. This said, this liquidity-fueled rally has to stop at one point, and we can only check those strong resistance. The one now is on 42.20. We have reached the stall level, but I don't even think it will stop the bull run for now. The market closed at around 41.80, and it is really aiming for 42.20 now. We have a channel here, and it's pressing on the upside. There's another one here, so let's see how it goes. This momentum has to fade at some point, and I think any news can actually unsettle the market. I wouldn't say spook it, but at least unsettle for a bit. We see here that we have the bullish resilience level, this green line on 41.15. The pivot is the same as the first salient fib on 40.65, then 40.25, 39.85. So if there's any retracement, it could be brutal, but will probably not go below 40.65. So this is the outlook, probably bullish until it stops. I would hope 42.20 could stop it. As far as this pattern, fib expansion pattern, which I showed last week, the next level would be next 42.91. So let's hope we don't get there. I mean, this is a frustrating market for market neutral traders, but of course, if you're on the bullish side, good for you. Now let's look at the longer term time frame. This is the daily. And March, the resistance moved to 40.65, and last week it actually moved. Now it's actually on 43.85, even above this fib expansion target, which would be more or less on the stall level here. Even though this is not a very sustainable rise, it's really like not looking back, going straight up. This is slightly above a normal angle of attack. This is probably the type of gradient we would be looking for a longer bull run. So this one will probably call for a stop at some point, and then we will check for 40.65. But at this time, there's nothing really. It is bullish. I mean, let's not beat around the bush. This is frustratingly bullish. Now let's look at what the trend will be tomorrow. This is a 1 hour chart. Here we see that we have a strong resistance on 41.80 or thereabout, which has been penetrated. Maybe it will, like it did here. When it broke, it tested it, didn't break, so it didn't have much momentum. Tested again, even dipped below, and I can't remember. I think that was a Johnson scare. I mean, all of last week we had quite good news from the economic front, which definitely should make the Fed change its stance. I mean, most market participants are probably saying, well, so far so good, looking for earnings and probably discarding whatever the Fed has to say. But we will see if the Fed can actually change the market tone next time it meets. Okay, so here we will see whether again this 41.80 will be tested for support. We have again the bullish resilience here, which looks quite low, but it's only 41.15, 16, close to strong support on 4100 here. So here again, I mean, we may have some hesitation around 41.80. If we look at the 4-hour chart, it could actually aim a little higher, but if it goes below, test it for resistance, then it may go to the channel low, maybe even to fib, but I wouldn't be too bearish. It's difficult enough to be market neutral, maybe have a little bit of a bullish bias to our trades. We will look at that in the next video, but I would say for now, go with the flow. This market is bullish, whether we want it or not. Right, so that is it for now. Next video will be on the Rhino. I've just checked and I don't have any Friday's closed data, so I will record it on Monday morning. Thank you for watching, and as always, you'll get 2 free updates on Slack, bwbflies.slack.com, or just leave a comment and I will send you an invite if you can't get there with the URL. Okay, have a nice Sunday and see you tomorrow on Slack. Bye for now.